All right, perfect. So we talked about overfunding cash value life insurance and how we would actually fund our bank. So now we want to talk about how we actually, the personal banking blueprint to help you get out of debt as fast as possible. And it's actually called snowballing your debt, paying off debt faster, allowing you to recapture lost interest. Okay. Whenever we're paying off debt, we have to do it strategically because it's been built and loaned out to us in a strategic manner and fashion. And the only way to overcome that is to have some strategy on your own. Imagine playing in a game and the coach is running a specifically designed play that was built to exploit your team and how you guys are structured. And you don't do anything to combat what he actually set up against you. You're going to lose every single time. So we have to have a personalized financial strategy in order to combat the debt that was actually put on us. Okay. And so we're going to talk about that. So debt snowball is actually a method, a strategy to pay off debts. And we actually order them from smallest to the greatest balance, right? From smallest to the largest. And we focus on one debt at a time. And we do that by making minimum payments to all our debts. The minimum payment, any amount that we have left over that we were paying, we actually want to place those dollars into our personal banking blueprint. Okay. Any money, any extra funds we can get to fund our bank first, we want to make minimum payment on all our debt, fund our banks with any leftover cash, and then pull from our bank to actually come in and pay off the smallest debt first. Then we go to the next, and then we go to the next. And we continue to leverage those minimum payments and the money we pull from our bank account to create a snowball effect, helping us pay off debt faster than we ever thought. Okay, we want to gain momentum and motivation as we pay off each debt. This works because it's almost like there's a little bit of psychology that's into this, right? And so imagine you get into our personal banking blueprint, and it is our goal to pay off your first debt in the first month or 2 months. So within 30 to 60 days, we want to pay off your first debt, allowing you to quickly recapture lost interest that was already strategized and planned to take away from you and your family. We want to get that back. And that is a huge win. That is a huge step into financial freedom. So when we do that, we actually increase the motivation for you to continue to pay off your debts, and you will have established a clear and manageable steps to continue the path of what's next, what's next, what's next. You see, a blueprint gives you the steps, gives you the process to take to become financially free. Okay, and so how do we implement this? We talked about it a little bit earlier. You list all your debts from smallest to largest. You pay as much as possible on the smallest debt. You make minimum payments to the rest. Once the smallest debt is paid off, you move to the next smallest, adding the previous payment amount. And by doing that, you're actually snowballing to become debt free. Here's an example. This is an example of someone who has 3 different debts. The first one is a $500 credit card balance, $1,200 medical bill, and $3,000 car loan. Total time to pay off, the total cost is $4,700 in debt that we actually have here. Ladies and gentlemen, I want to let you know that compounding interest is working against you. Okay, working against you. And so typically, if you looked at an interest calculator, typically whatever you're paying on, you would have to pay double, if not triple the amount, should you go off their repayment strategy. So that $500 may cost you $1,000 to pay it off. That $1,200 may cost you $2,400 to $3,000 to pay it off. And that $3,000 could cost you anywhere from $6,000 to $9,000 to pay off that $3,000 loan when you add in interest. However, this snowballing personal banking solution allows us to recapture all of those additional interest payments by paying this off in a structured way as fast as possible. So this, in this example, will allow you to pay off that first debt in less than 2 months, that second debt in less than 4 months, and the last debt, that $3,000 car loan, in less than 10 months, totaling $4,700 in payments in 16 months. This is just an example. And it all depends on how much extra cash we can actually find and take back from subscription services and unneeded areas that we were already spending, and place it in our personal bank so that we can come in and blast this debt away. Keynote that I want to add: as you paying off these debts, you continue to earn 46% interest in your personal banking account, while slashing the 18% interest off that credit card, the 10% interest off that medical bill, the 8% interest off that car loan. You're slashing that while earning 46% the whole time. You're leveraging $1 to do two different things: grow and recapture lost interest payments. Recapturing lost interest. We talked about previously how 40% of our lifetime income goes out in taxes. Here's the second alarming stat: another 34% is paid out in lifetime income. Meaning that if you earn $1 million, $340,000 of those dollars will go towards interest payments. These are things that you don't get, you don't even see. It's just money gone. This is why when you get your check and you pay your bills, between interest and taxes, interest being 34%, taxes being 40%, 74% of your lifetime income is gone towards interest and taxes, which is nothing. 74%. So that leaves us 26% to pay our mortgage, 26% to fund our children's education, 26% to pay back student loans, 26% to fund our dream business, 26% to live in our dream home, 26% to retire. It's not enough. So what we have to do is we have to reduce those interest payments by eliminating debt faster, allowing us to recapture loss interest and use it to build wealth, turn it against us. Hey, that $340,000 in interest that we were planning to pay off, what if we can recapture $150,000, $200,000 of those dollars, and now leverage those dollars to actually invest in real estate, invest in a business, invest in the stock market, so that we can earn interest, earn compound interest, so that we can fund our children's education, so that we can fund our businesses that we want to put in place, so that we can fund our retirement. I hope you guys are seeing how powerful this is and what an opportunity this is to, if you're doing well, do even better. If you're feeling the pinch, unleash yourself from that and set yourself free. And it starts by eliminating debt and recapturing those interest payments that were designed by the traditional banking and lending systems to leave you. The personal banking blueprint has to use cash value from your policy to pay off the debt. You can borrow against it at a lower interest rate. So remember, you're earning 4 to 6%. 4 to 6%. You may get charged an interest rate from your own personal bank, the life insurance. But here's what I can tell you. If you're earning 4 to 6% and they charge you 4%, how much interest did you pay? 0. Possibly still earning a net 2%. So again, we have to understand the way interest, we have to make it work for us, versus if we put our money into a traditional bank and we come in and they pay us no interest, and then we ask for a loan and they turn around and pay and charge us 8%, 18% interest. Are we winning or are we losing? We're losing big time. Okay? The personal banking blueprint continues to earn dividends and interest on your policies, cash value, even while it's loaned out and you're repaying yourself. We still earn interest on those dollars. So, step-by-step guide: pay off high interest debts using a snowball method. Use policy loans to pay off remaining debts. Repay the policy loan at a pace that suits your financial situation. Again, once I pay off a debt, if I need to wait several months before I make the next payment or pay myself back, I can do so. If I need to wait 10 years, if I purchase a rental property and I leverage $15,000 from my personal bank and I need a year or 2 years to start to repay myself back. I can do that. I'm the lender. I control the repayment structure. If I never want to repay myself, I don't have to. And guess what? It's backed by my debt benefit. So if I have an outstanding loan and I got $1 million of debt benefit, but I owe $400,000 in loans, well, guess what? They take the $400,000 and they give my beneficiary $600,000 tax free. My beneficiaries still have the real estate. They still have the business. They still have money outside of my policy that's earning compounding growth. And they get the $600,000 tax free. Redirect saved interest payments into investments and savings. The benefits of snowballing is faster debt elimination leads to financial freedom. Significant savings on interest payments, increased financial control and stability, and the ability to build wealth and secure a prosperous future. Again, don't allow for the traditional banking system and lending system. Just don't go freely with what they want you to do. Implement strategies to counter what they have against you so that you can put you and your family in a situation to win. In conclusion, implementing debt snowball method to pay off debt quickly, use of the personal banking blueprint to recapture lost interest and build wealth. If this is something that you want to use to take control of your finances, click the link to be able to go in and contact us and book a call. I will let you know that you do have to apply to work for us. We're giving you guys a personalized financial strategy, and we can't work with anyone. So apply to see if you're accepted and see if you can get in. We will not damage the quality of our services in order to try to bring in as many people as possible. That's not what we're looking to do. Okay? We can't save the world. But those who do get in and those who are qualified, I can guarantee you financially, your life, your last name will not be the same. So click the link, go ahead and apply. And we hope that you can get through. We hope that we're here to be able to serve you and we can build a relationship and celebrate you eliminating debt quickly and celebrate. We want to know more about what your dreams are when it comes to investments, vacations. Where do you want your kids to go to school? Right? We want to know about those things, and we want to help you put in a strategy to help you achieve your goals.